Ladies and gentlemen, good day and welcome to the Q2 and H1 FY21 earning conference call of COSMOFILMS Limited, hosted by PhillipCapital India Private Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. I would now like to hand the conference over to Mr. Dhiral Shah from PhillipCapital India Private Limited. Thank you, and over to you, sir.
Yeah, thank you, Janice. Good afternoon, all. On behalf of PhillipCapital PCG desk, thank you very much once again on joining us on this Q2 and H1 FY21 earning call of COSMOFILMS Limited. First of all, we are glad and thankful to the management of COSMOFILMS for giving us this opportunity to host this earning call. Today we have with us Mr. Pankaj Poddar, CEO of the company, Mr. Neeraj Jain, CFO of the company. Congratulations on a good set of numbers, sir. And now, without further ado, I would like to hand over this call to Mr. Neeraj Jain for his opening remark, followed by a Q&A session. Thank you, and over to you, sir.
Well, thank you, Mr. Shah. Good afternoon, ladies and gentlemen. I'm Neeraj Jain, CFO at COSMOFILMS, and joined by my colleague, Mr. Pankaj Poddar. Our financial results for the September 20 quarter and the investors' presentation are already uploaded on the company's website. Well, we will start this call with a brief on the performance of the company, and which may be followed by the questions. Company has posted highest ever quarterly EBITDA of 99 crore rupees during the quarter 2 on the back of higher specialty sales, double-digit higher sales compared to last year, and improved operating margins. Sales is higher by 16%, primarily due to higher volume. The company's volume got normalized during the quarter 2 FY21. It was impacted in the Q1 temporarily due to COVID-19 impact. If you do recall, part of the factories were closed, particularly during the month of April in the quarter 1. Now in quarter 2, capacity was running close to full utilization. BOPP films margins has been running at 26 rupee per kg compared to 28 rupee per kg in quarter 1. Although margins have marginally softened compared to quarter 1, but if you do recall again, in April month during the quarter 1, margins were running exceptionally higher, which got normalized over a period of time. We believe the margins should sustain more, particularly as the flexible packaging demand is expected to continue to increase in India and the world, in fact, post-COVID-19. We do also believe that very clearly there is an increasing shift in consumer preference towards the packaged product, more particularly in the food category. And the people are more and more concerned about the cleanliness and the hygiene, so that's helping the overall flexible packaging, additional demand creation. COVID-19 pandemic had very marginal impact during the quarter 2 on the operations. The company expects COVID-19 impact may remain marginal in the following quarters and the year as well, barring unforeseen circumstances. Company's 100% subsidiary has started commercial production of specialty master batches from the quarter 2 onwards. We do expect volume to peak in the second half of the year. We do also expect the subsidiary to start making textile chemicals and adhesives from the FY22 onwards. Subsidiaries are back on the track post-COVID-19 impact temporarily in the quarter 1. EBITDA taken together for the subsidiary for this quarter is about 5 crore rupee as against 1.5 crore rupee of the quarter 1. Company is set to grow its specialty further as we are enabling some of the large production lines to manufacture specialty products from the quarter 4. although it may have some marginal impact on the quarter 3 volume. But from the quarter 4 onwards, this will facilitate further expansion of the specialty portfolio. The company continues to work on the Surat sustainability project, which we in fact largely started from the quarter 1. Be it on the power consumption, water consumption, gas consumption, waste elimination, or the recycling of the waste. Besides environmental positive impact, we will also start rationalizing the cost from the coming quarters. The specialized BOPET project is progressing well as per the schedule and is scheduled to start commercial production from second quarter of FY22-23. Activities are on track for pet care as well, including IT infrastructure, brand strategy, resource building for the vertical. We are expecting pilot launch to be kicked off in NCR in quarter 1 of FY22. Equity shares buyback, as announced in October 22, reflects management confidence in the business strategy and growth prospects. Besides this, it will also facilitate improved earning per share, ROC and ROE. It may also be mentioned here that dividend policy should remain intact, should not have any impact because of the buyback. The company continues to focus on the specialty films, supporting brands and building recyclable packaging structures. That focus will continue. The company is also investing in several new initiatives, including moving to SAP HANA, one of the most advanced ERP available, the paperless office, AI and data mining related projects. These taken together will automate processes in the coming quarters and will also have favorable impact on the operating cost with superior customer experience. The company's net debt at the end of September 20 is 485 crore rupees, which is 1.4 times of net debt to EBITDA ratio and 0.6 times of net debt to equity. So fairly healthy financials. The company is operating close to 20% return on equity and 18% return on capital employed on trailing 12 months basis. I think these were the few updates I had on the quarter. Now we would like the con call to open for questions, please.
Thank you very much. Ladies and gentlemen, we will now begin the question answer session. Anyone who wishes to ask a question may press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Manan Shah from Moneybee. Please go ahead.
Yeah, hi. Thanks for the opportunity and congratulations for a good set of numbers. Sir, I wanted to know if you expect these gross margins that you mentioned around 26 per kg, should they sustain, or is there any new line that is coming up which might lead to a little bit more suppression on these gross margins?
Hi. So there are two parts of our business. One is the specialty growth that we continuously grow from quarter on quarter. On that business, we do not expect any reduction due to any new line coming up in the coming years, which is roughly 55% of our total sales. The remaining 45% business, which is still the normal BOPP which everybody supplies, and it is linked to the nuances of demand and supply. Having said that, we expect maybe 2 lines to come up in the next year, and the demand also is expected to grow in the similar range. So there could be 1 or 2 quarters which may undergo some challenge when these lines come, because the supply comes up as a step growth while the demand grows as a trend line. We'll see it, but I think the main thing is that our specialty is growing very nicely. This year we are growing close to 16% versus last year, and that is what we intend to do. And I think investors should look Cosmo as a specialty company, because our target is to be 70% of total sales to be specialty within 2 years.
Right.
So
you mentioned these 2 lines that will be coming up next year. Could you mention what size are these lines?
I think they should add put together 70 to 80,000 tons.
Okay.
And so they will come in. One line is expected to come early next year, and the second line is expected to come by mid of next year.
Okay. And post, so we are converting one of our line into a specialty in Q3, you mentioned. So how many days of downtime do you expect? And post this conversion, we should be able to take our specialty mix towards the 70%, or more things would be required to be done to take that to our target of 70%.
So after these 2 changes in the 2 lines that we are going to do, this should be good enough to take us to 70% specialty of our total sales.
Okay.
And as far as the shutdown is concerned, the 2 lines which are undergoing shutdown, hopefully in the coming quarter, they will result in roughly 2,500 tons of impact to our total sales, roughly. Yeah.
Okay. Okay, thank you. I'll come back in a few.
Thank you. The next question is from the line of Samar Shah from Synapse Broking. Please go ahead.
I had a simple question on the gross margin side. The spread is very much set to us, but this comes through more on the procurement side, that lower procurement you're doing per kg, or this comes as a better realizations per kg that we are doing? Because typically we've come from 7-8 rupees per kg to 25. So on what back we are coming here?
I didn't get your question. Sorry, can you repeat? What do you mean by this?
The simple question is, the margins have improved on gross level. So this comes on the side of procurement. We are procuring at a cheaper level and reducing the per kg cost of procurement, or this comes as a higher sales price that we are getting to the customers in the specialty side.
Yes, so there are 3 impacts which have happened in the current year. The first impact is specialty growth, which is roughly 16% growth versus last year, and making a significant impact to our P&L. The second impact is that the normal B2B margins are also better versus last year. And the third impact is that in the Q1 we were able to get a reasonable deal on raw material, and even our full year deal is marginally better. But I think that impact is not as sizable. Most of the impact is coming from the specialty sales growth and some improvement in the BOPP margins on an overall basis.
That's it. Thank you.
Thank you. The next question is from the line of Milan Shah from Urmil Research. Please go ahead.
Hello. Hello.
Please go ahead, sir, with your question.
Hello. So congratulations for your excellent number. My question is, market process is starting next quarter. What is the benefit to company in raw material price, and how much the volume from that market plant?
Sorry, I'm not able to hear you properly.
Hello.
Yeah.
Our master plant is starting from next quarter.
It has started already.
Okay. Then what is the potential of that volume in crore?
The volume addition should be close to 10,000 tons a year.
Okay. And which is we are going to diversify in textile chemicals from next year.
Yeah.
What is the reason for that segment? We are going to diversify in this segment.
The textile segment has huge potential because if you see the cotton clothes, every year innovations are happening, whether in terms of creaseless, whether in terms of virus-free, whether in terms of better feel of the cloth. So this is an area where with the help of chemicals we can make a lot of innovation and improve the quality of cloth. And given our R&D strength, we were trying to identify which could be a very good area for us to deploy on the chemical side, and we identified this is a very good growth area, and therefore we entered this segment.
Okay, and sir, what is the capex plan for PET diversification? We are going to this segment also.
You are saying pet care?
Yeah.
Yes, so the pet care, we are anticipating that we may have to shelve around 100 crores over a period of 5 years.
Okay, and we are going to collaborate with anyone international, or we are going to research ourselves for pet care?
Pet care, we are doing it ourselves, but at some point in time we will look at opportunities.
Okay, thank you, sir, and best of luck for great diversification from my side.
Thank you.
Thank you. The next question is from the line of Mohsin Kachwala from Individual Investor. Please go ahead.
Hello, sir. Good afternoon. Thank you for the opportunity. So I just have one question on the chemical space. Just wanted to know if you have any revenue target in mind, and from a 4 to 5 years point of view, like how much revenue do you now you're targeting from a chemical business? And do you have any major capex in mind which you will be undergoing in the future? So other than the textile, chemical, and master batches, also would want to know if you have any other products in chemical space which you have lined up, which will be launching in a period of time.
Yes, so within a period of 5 years, we are looking at 400 to 500 crores adding to our top line from chemical and master batch business. And as we had informed in our calls earlier that right now what we have panned out is within chemicals we are looking at backward integration of some chemicals and textile chemicals. And after this we are looking at some of the adhesives, which also broadly get categorized under chemical space.
Okay, doctor. Thank you, sir.
Thank you. The next question is from the line of Sagar Shah from SK Analytics. Please go ahead.
Good afternoon, sir. My first question was regarding to our large production lines, which you had mentioned in your investor presentation, that from the third or the fourth quarter we will be changing one of the large production lines into a specialty one. So basically, I wanted to know that which products are you actually planning to manufacture in the specialty portfolio per se?
Yeah, there are multiple products, but we would not like to share too much detail at this stage. But most of it, which we are going to do from this line, will be a specialty product.
Okay.
From time to time, we will share more details on this.
Okay, no problem. My second question was actually regarding our competitors' impact. Actually, one of your two largest competitors actually have declared large capex of nearly 450 crores in the commodity BOPP line actually, but they haven't mentioned about the product, but they have mentioned about the capex. And since they are large capex, so I think they would be functional at around maybe 24 months. So how do you see this actually scenario again, like a oversupply situation? Are you seeing post 2 years down the line by seeing this huge capex, or any views on this?
We are not as much concerned because within 2 years we will have minimum 70% of our sales into specialty.
Okay.
So that may not bother us much, though I understand that 30% volumes will still be the normal BOPP films. But I think majority of our businesses will be specialty and very high-end specialty. And within 5 years, we'll be sitting on a very, very different, game plan. So, we are really not as much bothered in terms of what line is coming and when they are coming, because they're largely on the commodity side.
Okay. Actually, my third question was related to what you just said. Actually, I agree that 70% you are planning to convert from commodity to specialty products, basically. But our few of our specialty products, metallizer films or maybe thermal films, they are like you are adding some value over the commodity films. And what happened 2 years ago that due to the oversupply situation, the margins got almost dropped actually. So even though I agree that maybe this wouldn't impact you at such a great extent, but at least a certain impact actually I thought would actually. I just wanted one color on that. And secondly, I just wanted some color on the margins actually. You are enjoying some almost, if I see 16-17% EBITDA margins, which are almost doubled as compared to if you see maybe 18 months or 24 months before. So do you think these are the peak margins if we can achieve actually as for the gross or the EBITDA level, or think there is some scope for recovery from here also?
So to answer your first question, yes, till the time we have some commodity business in our total portfolio, there will be some impact because of demand supply. So if 30% volume remains as a normal BOPP film, those volumes will be impacted, but increasingly, even that business is on raw material linked pricing, a good part of it. And second is when we have to sell such a less volume of commodity films or a normal film, we can always play a little bit role on the pricing part. To answer your second question, on the what was the second question?
Second question was, are these the peak EBITDA margins or the gross margins that the company would see, or because of the favorable raw material mix and also because of benign raw material prices? So, or we'll see recovery also from here actually?
We have certainly not reached our peak.
Okay.
We intend to take our peak beyond 20%.
Okay, got your point. Thank you, all the best.
Thanks.
Thank you. The next question is from the line of Amit Doshi from Care PMS. Please go ahead.
Yeah, thank you. Sir, I understand about the specialty, focus and, generating that 70% contribution to the top line of our company. But, and you're not really bothered about the new lines that are coming up, which are more on commodity side. But what makes you confident of the stickiness of the customer? Because, of course, margin is one thing. But what kind of products when you say specialty? So why is that a customer can't shift from Cosmo to something else or somebody else? Just wanted to understand that.
Because there is a significant research which nobody is investing on.
Okay, so the products will be of a research nature, which will not. Okay.
The two parts of it. One is the research and the culture. I think these are the two most critical elements of Cosmo, which will always keep us as a leader in this segment.
Okay. And I think that's one question from my side. Thank you.
Thank you. The next question is from the line of Vipul Kumar, individual investor. Please go ahead. Vipul Kumar, your line is unmuted. Please go ahead. As there's no response from the current participant, we take the next question from Siddharth Potra, Principal India. Please go ahead.
Yes. Good afternoon to you, sir, and congrats on excellent set of numbers. So my first question is on the export market. If you can just help how the momentum is there in the export market, and from the India perspective, whether the other players, they are also targeting the export market, or the margin in the export market is a bit better than domestic market. Some view on that front.
See, when it comes to commodity films, I would say most of the months the margins in domestic are good unless the domestic margin suppresses a lot. As far as, there are competitors who do export, but their export is largely limited to commodity films, while Cosmo's majority export, 80 to 85% of what we export is largely specialty films. So that is the difference between us and the competition.
Yes, sir. So why I'm also saying, because generally if the other players, they are exporting a lot of commodity film, then in turn it keeps a balance in the domestic market. So from that angle, so do you still think, do understand that Cosmo is more into the value addition and they're exporting a lot of product into the specialty segment. But do you think that as of now, the export market, as far as commodity film it is concerned, it is still quite lucrative, so that the balance it can be maintained in the domestic market?
You see, when it comes to Cosmo, as you rightly pointed out, given that we export to more than 100 countries, we know virtually small to large customer in every market. And therefore, we are very choosy while booking our orders. And therefore, even when we try and sell the normal VOTP film, we tend to make a very good margin on that. However, when we try to generalize it for all the players in the market, for them, export is kind of a dumping ground. And for Cosmo, we are very selective to which customers we sell, which product we sell, and at what price we sell.
Okay. Sir, regarding the 6 month Cosmo, it has been quite active. Most of our lines, it was operating, and hence I assume that we might have got some benefit in terms of being a very responsive company. So have we seen any client conversion? That is part one. And so whether China has also played an important role, where at least some of the clients which were just asking us for some small quantity, are we seeing the client conversion at a little faster rate, mainly in the export market?
Yes, so some of the segments, yes. Some of the specialty segments, I would not like to name them. But you have rightly pointed out that given that we were so efficient in managing the overall situation, our growth rate in specialty is very strong and robust.
Okay.
And now we already have a very large base on specialty, and still growing at 16% is no easy task.
Absolutely. Yes. Sir, in terms of our overseas subsidiaries, sir, do you think that still, sir, we have potential to make those overseas subsidiaries has still some potential to make large contribution to our bottom line, and some of the key initiatives that we have taken to achieve those milestones?
We have very high hopes from America market. In fact, I would like to recall our investors that in one of the years we made $5 million of losses, while this year we are projected to more than $2 million of profit in America. And I think we are nowhere close to our potential. Within 2 years, we should easily double it, if not more. And the other important thing is that it is all tax-free, because we have $17 million of accumulated losses, which are actually written off in the books. So whatever profit that we are going to make in America will be totally tax-free.
Okay. So apart from, as you correctly said, that from 2 million, we would like to double it in 2 years. So even we will be able to see the good growth in the US market. That is the revenue.
Yeah, our entire focus is specialty films, and one of the segments where we were struggling for 3-4 years, we could make a product which got approved, and the customer was so excited with such a superior product that we supplied them, that they bought a very significant quantity by air. They wanted to really expedite their development with COSMOFILMS.
Okay. And so this is more of a recent phenomena, the benefit or the scale benefit it is yet to come? Okay. So the scale benefit it may come.
Potential, and we have not reached even 5% of the potential from for those customers and those segments.
Okay. Sir, I do understand that you don't like to speak specific on a product, but if it is possible, you can throw some light on our synthetic segment where the potential it is quite large, and we were trying to develop B2C market, some new product portfolio we are planning to launch. So how the progress it is happening there? Hello?
Yeah, hi, sorry. So progress on the CSP is well, and I would take it in two parts. One is on the domestic side and another on the export side. So export, while for a month or two it lost momentum during the COVID period, but the order inflow is back fairly well. In fact, more than what it used to be pre-COVID period. And on the domestic side also, we have done most of the work on the creation of the distribution chain. We created more than 80 distributors already. So I think the benefit should reap in the coming quarters.
Okay, sir. And the final question from my side, sir, can you just tell me the opportunity in industrial segment, especially in case of label segment? My past segment, the label, where the margin is even higher than our specialty film. So, any breakthrough product that we have developed in our R&D department, if you would like to share something on that.
One is what's happening on the label side, since FMCG as such demand is growing, and as you know, most of these products need label. So as such the segmental demand has increased substantially, and that is the trend we are witnessing only on the domestic side, even on the export side as well. So I think it's all set to further grow the demand in the label side.
Okay. And so this conversion of commodity line to specialty line of 30,000. So sir, here once it is being converted, so input and output ratio will continue to be still 30,000. That is number one. And when can we utilize this entire 30,000 specialty line?
See, utilization is not an issue. It is a conversion of normal BOPP business into a specialty business.
Okay.
Of time, it will not happen overnight.
The
line will be capable to start taking more business of specialty films.
Okay. So, but what was the visibility that we have? It is fair to assume that.
Sir, I'm so sorry to interrupt, but may I please request you to join the question?
Yeah. Okay then.
Thank you. The next question is from the line of Shubham Agarwal from Equitas Investment. Please go ahead.
Hello, sir. So my question is regarding volume growth YOY. So can you give that number?
So this year we had no significant volume growth because there was no new capacity expansions. Our entire focus remains on converting the normal BOPP business into specialty business, and we have grown by 16% versus last year in first 2 quarters.
And the realization compared to last year, how much will it?
Almost 9 rupee better realization.
9 rupee?
9 rupee per kg.
Conversion from commodity to specialty, this 30,000 ton. So you said 2,500 ton will get impacted. This will happen in Q3 or Q4?
It will not happen overnight. It will take 2 quarters or a couple of years to reach to its full potential. I mean, it is not something that we have changed the line and from next day customers will give us specialty business.
Got it.
There is a significant approval process that we have to go through.
And sir, what would be the current capacity utilization?
100%.
100%. So are we looking at adding another BOPP line or working towards it?
Right now, we have announced a polyester line. We are sticking to our plan. For next 6 months, there is no new capex that we are likely to announce it.
Okay.
Right now, what is there in the pipeline is a chemical project for which the line has been ordered, and it should be up and running by, from a calendar year perspective, roughly mid of next year. Within this financial year. And then we are going to order an adhesive line, which we will be ordering in Jan to March quarter, and we should be up and running in the quarter 3 of next calendar year.
Okay. Chemical line will start when you said?
Sorry?
Chemical line, when will it start, you said? Adhesive will start in Q3 next calendar year, and chemical when?
Within this financial year, the last quarter.
Okay, Q4. And sir, lastly on the master batch side, so this got commissioned last quarter, Q2. So how is it ramping up, and what is the revenue potential in H2, if I may know?
Yes, so it has a revenue potential of close to 90 to 100 crores.
Okay.
But a very significant part of it is internal, because it's a backward integration. It will help us improve more on the margin side than the revenue numbers. But we expect 25-30% of the sales to be made externally as well.
Okay. Got it, sir. That's it from my side. Thank you.
Mr. Agarwal, does that answer your question?
Yeah, that's it from my side.
Thank you. The next question is from the line of Pranav Saveri from J&J Holding. Please go ahead.
Hi, sir. Good afternoon. Thank you for the opportunity. Sir, if you can just throw some light on the production numbers for Q1 and Q2.
Sorry, we don't share that.
Okay. But we are running at about 100% capacity in Q2.
That's right.
And I think maximum what we can do is about 75% of the installed capacity, right? Hello?
We are saying that it is dependent on certain factors like microns and changeovers and so on and so forth. As a general thumb rule, you can say 75%.
Okay, sir. Sir, there's two line items. One is the sales tax incentive and the other is the export incentive. Is there any change compared to the last year, or both are available till what time, and are the rates the same?
Yeah, so both are available for next few years.
And the rates?
Incentive is an ongoing thing. The only change government has made is MEIS, which government has put a cap of 50 lakhs. And the second is the sales tax incentive, which is there for many years, next few years.
Sorry, I didn't get on MEIS. You said there is a cap of?
You see, export, we have a lot of export incentives that we get.
Okay.
Out of that, several incentives that we get, there is one incentive called MEIS.
Okay.
And MEIS government has now restricted to 50 lakhs. So there is some impact to COSMOFILMS because of putting a cap on that number. We are not sure whether it's a permanent cap government has put or it's a time being because of COVID. We'll have to really see what the government does on it from January onwards. As far as the sales tax incentive is concerned, we got this because of our last investment at Baroda. And this will be for a total period of 10 years. And right now, only 2.5 years have passed since then.
Okay, sir. Thank you so much.
Thank you. The next question is from the line of Vipul Kumar, individual investor. Please go ahead.
Hi, congratulations, sir, for good set of numbers. I just want to understand that all this thermal coating, metallizing and CPP, they all are specialty?
Not at all.
Not at all. Means they can be, sorry?
In fact, metallization we consider as a BOPP normal. But within metallized also, there are some products which are specialty. So we don't classify based on assets. We classify based on the product that we make, and there are 4-5 very of criteria based on which a product is classified as a specialty.
So out of your total installed capacity of 1,96,000, sir, how much should be specialty in installed capacity?
Yeah, we are making more and more lines capable of doing it. And as we said that to reach 70%, after we make changes to 2 of our lines, we can reach 70%.
So by what time we will reach that, sir?
It's a 2-year target we have taken for ourselves.
And lastly, sir, what our means in our overseas subsidiaries like US or Korea, so we means how they function? We don't manufacture anything; they are just trading subsidiaries. Can you give some color on that?
Yeah, so Korea we do manufacture thermal lamination films. US is largely a trading, but we see significant potential for specialties because US is the world's largest market for specialties. And as I told earlier that we turned around these operations from a $5 million loss to $2 million profit. And we expect that this journey will continue and we will make more and more margins in American business.
So, but then again, we'll be exporting specialty from India to US. We'll not be manufacturing anything there, right?
That's right.
And lastly, sir, you said for master batches, revenue potential is 90 to 100 crores. So that will be at full capacity. So when will reach that full capacity in master batches?
By end of Q4.
This financial year is Q4?
That's right.
Okay, sir. Thank you very much and all the best for the future.
Thank you.
Thank you. The next question is from the line of Navneet Bhaya, individual investor. Please go ahead.
Hi, sir. Congratulations for a good set of numbers. My first question is with respect to your presentation where you have mentioned, the India supply and demand scenario of 640 and 500 as the demand. The same was 680 and 540 respectively in August. So, is there some classification change as in both have dropped by 40,000 tons each in 3 months?
I think it's the same number as was reflected in the previous quarter because there is no new capacity got added in the quarter.
Okay, so your August presentation mentioned 680 and 540, whereas this one mentioned 640 and 500. So which one should we take?
Most recent one.
Okay, perfect. So that is the clarification I wanted. Second question on your specialty margins. So your commodity margins, as you mentioned, Pankaj, can vary as per the demand and supply. So if that goes up by, let's say, 26 to 32 or 26 to 20, either way, does the specialty margin also move by the same range as in, because that is commodity plus value add, right?
Specialty margins do not change based on the market nuances. So they remain consistent with raw material pricing.
Okay, so it does not work like commodity margins plus the value add. It is more or less fixed broadly.
That's right.
Okay, perfect. And on your textile chemicals, what is the capex involved and what's again the revenue potential that you've sort of announced right now, the capex announced right now?
Right now, we have done a small capex of around 15 crores. And from a revenue potential, we expect that within only from textile chemicals, we should be able to reach a turnover of anywhere close to 125 crores in 3 years.
In 3 years. So but this would require additional capex as well, I presume.
Not for this turnover. Overall, from a Cosmo specialty chemical company, we are expecting a turnover of 400 to 500 crores within 4 to 5 years. The main thing is that it is a very high margin business. And so we are being driven more by margin than the revenue part.
Okay, and can you outline the same for the adhesive line also that you mentioned? The capex involved, the adhesive line, the one that will be ordering in January.
We are yet to do that assessment, but again, it would not be a very large capex.
Okay. And lastly, the change in the line that you're doing for the 30,000 tons, how much CapEx would that involve in Q3 from commodity to you're changing your commodity line to specialty in Q3 of 30,000 tons, right?
Yeah.
So does that involve a capital expenditure as well, and how much would that be?
Yeah, it's little less than.
Okay. And so till the time this is utilized by the specialty demand picking up over the next 2 years, can this line still be used for commodity manufacturing till the specialty demand comes up, or once it's converted, it cannot be used for commodity?
It can be used.
Okay, perfect. Thank you so much, and all the best.
Thank you. The next question is from the line of Gaurav Jawar from Systematic Shares. Please go ahead.
Good afternoon, sir. Just want to know about the margin outlook. Do you foresee the same margin would be maintained in going forward, or do you see that should improve as the economy is opening up?
If you're asking a medium-term horizon, then the margins will go up. In the short term, they are obviously to some extent dependent on demand and supply.
All right. Thank you so much, sir.
Thank you. The next question is from the line of Adit Singh Dua, individual investor. Please go ahead.
Yeah, hi, good evening. My compliments to the management for a very transparent communication with the investor community. I have two questions, please. My first question is to Mr. CEO, Mr. Pankaj. See, I've been tracking your interviews and comments for the last 6 months, and you've taken a lot of efforts to explain the advantages of migrating to a specialty kind of portfolio. My question is that even this specialty portfolio, which stands at 55% now, has actually been gradually ramped up over the last 2-3 years, or maybe more. So what makes you feel so confident, like even in the second half of 2018 or financial year 2019, despite having a specialty portfolio, the operating margins had still gone down to single digits, like 8-9% in some quarters. So would you be able to explain in very simple words how, why do you say that a specialty portfolio is really insulated from the nuances of demand-supply situation, please?
Yeah, if you see 2-3 years back scenario, our total specialty in the overall portfolio was hardly 35%, right? And the prices went down by 1 or 2 quarters. It went down by almost 15 to 20 rupees kg, right? So with such a major movement and 65% volume at that time still in the normal VOPP films, you can expect that the margins will fall down. But the good thing is that from 17-18 on, from 16-17, 17-18, 18-19, 3 years we maintained close to 200 crores of EBITDA. So the margins went down very significantly for the commodity margins. However, overall EBITDA remained very similar, and that was made possible because whatever was the loss happening from commodity business was every year getting recouped with the improvement that we are making in specialty growth. The second good thing is that in the first few years, our growth in specialty was a single-digit number. Every year, that growth number itself has been growing faster. The first year we grew by 8%, next year we grew by 11%, third year we grew by 13-14%, and this year we are growing by 16%. So in spite of the fact that the base is getting bigger, our growth rates are also growing.
Okay.
And therefore, we are already to a great extent insulated, and within 2 years, our insulation levels will be far higher.
Okay. So if I may ask you, I mean, your management has the single-minded focus to migrate to specialty portfolio. Would you be able to give any example of any business, not just in this industry, but across any industry, where by migrating to a value-added product, the margins become more resilient and they also sustain over the long period? Like, you must have done a lot of analysis, so can you give any example of any such business? Yeah,
see, there are both examples in India and worldwide. India, especially if you track specialty chemical segment, there are plenty of players like this. Within our industry also, if you see Innovia Films, which was sold at a valuation of more than $1 billion, was almost 80% specialty films. And similarly, Exxon also was going on the same track, while in the later part of their sale, they lost that track and it became 50% specialty and 50% commodity. But in spite of that, Exxon was valued at $250 million when they were sold. So I think within our industry, these are two examples. While I think in chemical industry, there are many such examples like DuPont, Pro Chemical. Within India also, there are endless examples for specialty chemicals.
Okay. So, sir, by doing this migration over the next 2 years, let's say, do you feel confident that you would be able to de-link and break from the shackles of like your other peer companies in the flexible packaging industry? Because right now it all gets painted in the same color. But do you feel that could be one big factor for re-rating the company compared to your peers?
Absolutely.
Mm-hmm. Okay. Thank you. I have a quick second question for Mr. Jain, if he's available, please.
Yeah.
Yeah, Mr. Jain, this is about the buyback program. So, of course, as an individual investor, I've been tracking some milestones like the record date and all. But would you be able to quickly wrap up by saying like what milestones are to follow? When can the investors receive a communication? And very simply, like if somebody has a holding of X shares, so because it's a tender offer, so what percentage of the X shares can an investor kind of assume to tender or participate or kind of take part in the buyback program, please? Any such simple calculation that you would like to share?
Sure. So first on your first question, you see, it all depends basically on the approval from the SEBI. Once you receive the SEBI approval, then there's a fixed schedule in terms of the number of days which you need to follow. We do expect SEBI's approval in a week's time, maybe excluding the Diwali related holidays. And post an announcement will be made with respect to the when the payout will happen. In all expectation, it's expected to be completed within December.
Okay.
Second, sorry, could you repeat your second question?
Yeah, see, being an individual investor, I'm not very fully conversant with the types of buyback programs. So since this is a tender route, if somebody has a holding of X shares, like what percentage of it can one expect to tender and participate in the buyback program at the given rate, which is like 575 or something?
Sure. So here again, there's a specified percentages or the quota, I would say, specified by the SEBI for the small shareholders. So it all depends on how much quota or the application will be done under the small shareholder category. But very broadly, as a thumb, I can indicate you about 6% of the conversion people may accept.
All right. Okay, that is helpful to understand. Thank you.
Thank you. The next question is from the line of Kaushik Poddar from KB Capital Market. Please go ahead.
See, I mean, the one perennial thing that is there throughout this conference call is your specialty. So how do you want the company to be perceived in investors' mind as somebody who is focused on the specialty thing?
Absolutely, that's the core focus area. Moving more and more towards the specialty packaging company.
Specialty packaging or specialty chemical? I mean.
Well, initially, obviously on the specialty chemical side, it will not happen immediately. It will take its own time. So first focus areas, I mean, if you look at company journey from last few years, we have been turning the company into a specialty packaging company. Now, on the top of it, we have added specialty chemical first on this master batches and the specialty chemicals and then the adhesive to come. So all this will be a portfolio in years to come on the specialty side.
Okay. And see, as far as specialty goes, what is the kind of your spends on the research, development, and even market market development also?
Absolutely. So on the specialty packaging side, we do have close to 20 number of PhDs and polymer scientists kind of the manpower, which we expect further to increase to 30 number in a year's time. So this is a very good amount of spending we are doing there. And on the top of it, you see, some of the large R&D projects we do along with our customers. So part of the R&D cost is being shared with the customer. I think the focus is very clear, and you will notice that last 3 years actually, on the BOPP base side, whatever new products are getting launched in India, almost 2/3 of these new products are only from COSMOFILMS. So you can, estimate from that, what kind of the case we are running within the company with respect to new launch on the specialty side. So idea is to have a very wide range of the specialty products in the portfolio. At the same time, not to lose the focus.
Thank you. The next question is from the line of Ayush, individual investor. Please go ahead.
Hello. Sir, congrats on a great set of numbers. So just wanted to confirm one thing. You mentioned that 2 lines are expected to come up next year. So there was an announcement of like a Jindal poly line of 50,000 tons was supposed to start in September 20. So has that line started, or is it included in the 2 lines that are expected to come in the next 1 year? Hello?
So Jindal polyfilm line is expected to start within a quarter's time from now.
Okay. And 2 lines other than that line will start next year?
Absolutely. 1 line.
So total 3 lines are coming up?
So there are total 2 lines coming up in next 12 months.
And that includes the 50,000 tons Jindal poly line?
Yeah. So the actual production is expected to be close to 35 to 40,000 tons.
Correct.
And overall industry, we expect 2 lines to come in next year.
Okay, sir. Okay, that's it. Thank you.
Thank you. The next question is from the line of Siddharth Potra from Principal India. Please go ahead.
Thanks for the opportunity. Sir, regarding our BOPET line, so do you think that we are very strong on the BOPP segment? So cross-selling, it will become a low-hanging fruit, number 1. And number 2, like in BOPP films, where we have converted ourselves into the specialty segment, there is enough opportunity in the BOPET segment to cater to this value addition segment?
Yeah, so you are right. It should be very easy because, being in BOPP cross-selling is easier. But their entire focus is specialty there. And the 2 segments that we are planning to come, there are hardly any players in the world, very few players worldwide. So some of those segments cross-selling apply, while for a couple of other segments cross-selling will be very easy.
It will be easy. So, but the long-term game, even in the BOPET segment, is to have like 70 to 80% of would cater to the value addition segment, as and when it happens, might be after 5 years down the line.
I think our target is within 3 years to reach 50%, and within 5 years to reach 70 to 80%.
Okay. But even in BOPET segment, there are enough scope to where R&D can play a very important role, and whether our R&D team it is equipped to make a lot of progress in the BOPET segment, or we have to hire more and more people to cater to that segment?
Yeah, so it will involve R&D game, you're right.
Okay, sir. And so my final question is on the raw material front. I do understand that Reliance and the IOC, they have put up an additional capacity. So how do you think that the raw material it will play out for the upcoming 18 to 24 months? Because a lot of supply it has come.
Unfortunately, right now there is shortage because Reliance and IOCL plants are under shutdown. If there are more capacities come up, I think petrochemical companies are making tons of money. Their margin may reduce.
Okay. So, hello? So your voice is not coming clear.
No, so you are right.
Okay. So you said that there is some shortage of raw materials. Are we facing anything in the short term, or we are well covered as far as raw materials is concerned?
We are covered, but in general there is a shortage.
Okay. So which may impact the spread further or the revenue? I know it's a short-term phenomena, but are we seeing anything on that side?
Yeah, actually these are 10 days before Diwali is the softest season for our industry. I do not expect the margins to go up very significantly, but clearly, every year the margins go down in quarter 3, which may not happen this year.
Okay. So it may be maintained at around 25 rupees that we have seen in quarter 2, whatever limited visibility that we have.
Yeah, I think, yes, this quarter also looks quite reasonable till now.
Correct. And so my final question, sir, what will be our rate of interest? That is number one. I assume it is at around 6 to 7%. So, sir, do you think that it is required to repay any debt, because we are making quite handsome ROC, ROE, and if we are getting money at 6 to 7%, then why not to have some debt on our books rather than paying the same?
Yes, sure. So on the interest side, very broadly 6.5% is the interest cost. But having said so, there are advantages associated with keeping the extra liquidity, and that too, during the period when COVID is there. So although there is no impact so far of the COVID on the company, but we would love to have the extra liquidity if situation is on the higher side. Any case, on the net debt to EBITDA basis, we are at 0.6, so fairly healthy numbers from that perspective.
Yeah, that is very helpful, sir, and best wishes for upcoming quarter.
Thank you.
Thank you. The next question is from the line of Manan Shah from Moneybee. Please go ahead.
Yeah, hi. Thanks for the opportunity again. My question was also on the raw material which you just answered. So apart from that, I wanted to know whether the synthetic paper that we have launched, is it recyclable?
Yes.
Okay. And my next question was that I believe we received some tax incentives for capital expenditure in Aurangabad. So the capex that we have announced, would that qualify for incentives?
Yes.
Okay. Thank you.
Thank you. Well, ladies and gentlemen, that was the last question for today. I would now like to hand the conference back to the management for their closing comments. Over to you all, sir.
Well, the company is taking all steps required to transform into a specialty packaging and chemical company in years to come. Growth projects, whether you take faster batch or specialized BOPET line, higher specialty project, the pet care, all these are progressing well and in line with the plan. Company's focus shall continue on improving specialty, R&D projects, sustainability projects, and will further yield results in years to come. These actions, along with improved margins, will contribute in the long term on sustainable growth. I think there are a few things we look for. We really look forward. We are fairly excited and look forward for these. Thank you.
Thank you. On behalf of PhillipCapital India Private Limited, we conclude today's conference. Thank you for joining. You may now disconnect your lines.